Chinese stocks moving higher once again today, building on this week's rally following the announcement of Beijing's economic stimulus plan. Yahoo Finance's Akiko Fujita joining us now with 3 charts to explain the story. Hey, Akiko.
Hey there, Shauna. Yeah, those gains we saw this week mark the biggest single week gain in nearly 16 years. Those blue chip stocks on the CSI 300 index rising 4.5% on Friday, up nearly 16% on the week. And then over in Hong Kong, we saw the Hang Seng index up nearly 13% for the week. FOMO certainly kicking in on Friday here. Bloomberg reporting share turnover reached more than $100 billion in the first hour of trading over in Shanghai. And that delayed processing orders as traders really tried to get in here. All of this coming on the back of measures we have seen the government take to shore up what has been a slowing economy. On Tuesday, remember, we saw financial regulators announce a string of measures, including interest rate cuts to ease lending conditions. One of those changes we saw take effect on Friday. Now, regulators also announced that banks would be allowed to lend to companies to repurchase their shares. That, of course, a move aimed directly at restoring confidence in the market. On Thursday, it was Chinese leadership saying that China would deploy, in their words, the necessary spending to reach its stated growth target of 5%, calling for the forceful implementation of policy. And then they also committed to taking action to make the property sector stop declining, which of course has been the biggest laggard on the economy. Now, the question moving forward is what that spending will look like and how effective it will be in shoring up the world's second largest economy. The country has publicly stated its growth target is 5%, but there's increasing skepticism about China's ability to reach that target, given the slowdown we have seen in a number of economic data that's come out in retail sales, industrial production, the increases we have seen in youth unemployment. And then, of course, we've been talking about how that's led to some downgrades here. Goldman Sachs and Citigroup already lowering their full year projections to 2.7%. Of course, the question, guys, moving forward is going to be what exactly this forceful spending is going to look like. Those specifics not necessarily provided by the Chinese leadership this week, but bringing it back to the U.S. We've been watching U.S. listed Chinese companies, those shares, to see how much of that trade that we saw overnight will trickle down into the U.S. trade as well. Those stocks all, including Alibaba, BIDU, JD, all those have been getting a big bump here. KWeb, another one of those that we watch very closely from Crane shares, also getting a bump on the week. So the sentiment is good, at least for this week. But the question, of course, will be how much of this this momentum can be sustained, especially given that the implementation is going to be the most difficult part, and those specifics haven't been provided yet, guys.
Yeah, absolutely, Akiko. A lot of questions still remaining, especially about the transparency from the PBOC, but certainly something that is driving those stocks much higher for the week, as you said. Akiko Fujita, thank you so much.